Hello, Louis O'Connor here from Strategic Metals Invest. Now that the first quarter of 2026 is complete, I wanted to give you a short review of what happened across the strategic metals market because it was a very strong quarter in a number of key materials. So if you've been following this space for a while, the first thing to say is this: strategic metals have definitely not been standing still. Across much of our metals universe, we saw sharp price moves in Q1, and in some cases, exceptionally sharp ones. The strongest moves came from the rare earths. Dysprosium was up around 105% in the first quarter. Terbium was up around 103%. Gallium gained just under 48%. Praseodymium up around 46.6%. And then we also saw strong gains in a number of technology metals, with rhenium up roughly 34%, gallium up around, in fact, I think gallium and hafnium were both up 31.7%, and indium up around 16.7%. So among the additional metals that we introduced for 2026, bismuth was up around 19%, tellurium was broadly flat, and antimony was down 10.8%. So overall, this was a very strong quarter, especially in the core niche strategic metals. Now, the obvious question is, why did this happen? The short answer, as always, is that these markets continue to be shaped by different things: policy, supply concentration, and availability, rather than by normal investor sentiment or broad commodity speculation. So that is one of the things that makes strategic metals so different. These are not large, liquid exchange traded markets. They are small, specialist industrial markets, and when supply remains tight, when export controls continue, or when governments interfere with trade, prices can move sharply and sometimes very quickly. That was especially visible in the rare earths this quarter. So the very strong moves in dysprosium and terbium are exactly the kind of thing you would expect in a market where supply is concentrated. Processing chains are fragile, and geopolitical pressure is already elevated. Now, what is also important is that the strength was not limited to those two metals. Neodymium and praseodymium also moved very strongly, which tells us this was not just a story about the tightest corner of the rare earth market. It suggests broader firmness across the magnet metals complex. And that matters because these materials sit inside some very, very important industrial trends, from electrification and advanced motors to wind energy, electronics, defense applications. Think how much Europe is going to spend on defense between now and 2030, the US. So the technology metals, moving to the technology metals, I should say, they told a different story, or a kind of a similar story, but slightly different. So germanium, gallium, hafnium, and rhenium all posted strong gains as well. Again, these are not random metals. They're closely tied to semiconductors, aerospace communications, advanced manufacturing, and defense-related supply chains. So when you see this kind of broad move across both rare earths and technology metals, it reinforces the bigger point that we have been making for some time. So these are physical materials with real industrial relevance, and their prices are increasingly being shaped by strategic importance and fragile supply, not just by ordinary market cycles. Now, that does not mean every metal moves in the same direction all the time. Q1 is also a reminder that these are metal-specific markets. Tellurium, for example, was relatively quiet. Antimony moved lower. So this is not a one-way street or a one-way story in any way. Different metals have different supply structures, different end users, and different immediate pressures. But the broader takeaway from Q1 is absolutely still very clear, is that strategic metals remain a part of the raw materials world where scarcity, industrial necessity, and geopolitics can and does collide all at once. And that is why we continue to look at this market through a long-term lens, long-term exposure. These metals are embedded in the modern world, in electronics, in aerospace communications, energy systems, electrification, and defense. Yet many of them are still produced in very small volumes, often as byproducts, even byproducts of byproducts, so they don't occur naturally in the Earth's crust, and still depend heavily on highly concentrated supply chains. Now, that combination does not guarantee smooth price appreciation, but it does create the conditions for sudden repricing, and that is exactly what we saw in several markets during the first quarter. So we should also note that the quarter closed against a rapidly changing geopolitical backdrop. The recent escalation in the Middle East may not explain most of the Q1 moves we've just discussed, but it could become highly relevant, I should say, in Q2 if energy markets, transport routes, which I'm going to come back to in a minute, and industrial input costs come under fresh pressure. So as we move into the second quarter, that is one of the key things we'll be watching. Which metals remain most exposed to further supply tension? Where could sort of policy decisions matter most next? And which parts of the market are still underappreciated by most investors? So I'll come back to that in the next 8. But just before I finish, just wanted to mention one thing about I mentioned transport, which also affects supply, right? I was just over in Germany last week in the vault and at the office, and I was informed of something very, very interesting that Terbium have available now to themselves, which is the bonded warehouse in Frankfurt. All the staff that work there now, they've gone through government training, and we can clear the metals at German customs in our bonded warehouse in Frankfurt. So what that means is it kind of makes security a bit tighter, but you'll still be able to visit. But what that means is a security. Now we've gone to air transport for these metals a number of years ago for two main reasons. One, it started with piracy, and then two, the prices have gone up so high that it kind of makes sense. But we can now have a secure security truck pull up to the vault in Frankfurt and drive straight to the tarmac at Frankfurt Airport. Customs is cleared at the bonded warehouse before they leave. The reason we've done that, and we're the only company in Germany to do it, possibly the world, took us a long time. It was a result of our CEO was on a flight with what you might call the German Air Force One about 6 months ago on a trip to India with industry leaders. And we're in talks about strategically stockpiling for the EU. But as a result of that, we asked, is there any way we could clear our metals through customs? So literally our metals now can go from the vault in somewhere in Eastern Frankfurt, still confidential. Actually, we have 3 vaults. They can go straight from the vault onto a security truck and onto an airplane immediately. So we can have metals anywhere in the world in 24 hours. So that also, enhances our business model as well. We have a forward-thinking business model. I know I've gone a little bit further than I usually do here, but it's important stuff because we are an outlier. I mean, we're a pioneer in certain areas in this industry and have always been and will continue to be, but this is a new addition. So, I'll kind of finish with that, which is We're the only supplier in the world now that has a bonded warehouse, and we can go straight to a tarmac and an airport and load up the raw materials. Um, so with that, I shall leave you. If you'd like to hear some more about exposure to strategic metals, or if you'd like a copy of our latest investor guide, just visit strategicmetalsinvest.com. Thanks for watching. Sorry it went over 10 minutes. It was supposed to be 2 to 3.